Okay, good morning, guys. We're back for the major retest of gold. I get it. I told you I've been using gold as a leading indicator to drive this entire market. I'm just still on bed, relaxing. Usually we'll look at my market from 8 a.m. So, for whatever I'm seeing right now, this is just the beginning. We are still in this bullish phase, but as it stands right now, we're back to this neckline, and this is also an important phase also. So what you should know that on the 4-hourly chart, we are massively, you know, where we failed to recover this our last result. You get me? So we still have one more leg to go. You get me? So we failed. Sorry. Let me start that again. On the 4-hourly chart, we failed to break back into that last result. So whatever is up to you right now might just be one kind of a recovery phase, but let me go to the 1-hourly chart. There's no point being on the 4-hourly chart. So as you can see on this particular support that was broken to the downside that we are retesting right now, if we recover it, we will be coming back to this particular resistance again. Are you getting it? If we fail to recover it and break structure, continue breaking structure to the downside, not even if we continue breaking structure to the downside, if we fail to recover it, are you getting it? We're coming to 1900, which is 3000 pips. Are you getting it? 300 pips to the downside. Then if we recover it, it's just for us to come and check again if we can break, which I know that we might be consolidating within this area to see if we can do another smaller head and shoulders pattern to break to the upside. I get me to continue going. But as it stands, anything that is making us not even recovering or shorting from here to the downside, are you getting it? So this is just how the structures and the waves of gold move. So you can use gold as a leading indicator to trade other assets, because I believe gold is more clearer when I'm trading gold. Gold is more clearer among the USD pairs. Are you getting it? To me. So this is what I'm looking at right now. Of course, I have some sell positions already in this area, which I know that overall on the 4-hourly chart, we failed to hold this. Are you getting it? Aside from the 4-hourly chart that we failed to hold that, if you look at the upper side, you will see that the market itself was able to find, are you getting it, resistance here. So anything that is making us trying to recover might give the bulls an option of recovering to 1980 back. So there are some important pivot points in this chart that you must first of all look at. Yes, and so these are the pivot points, pivot areas. Like, what pivot means? If you are able to jump this hurdle, you go up. But if you are not able to jump that particular hurdle, you fall down. So that's what I mean by from this particular. That's what I mean by this particular. As you can see on the other side, you can see that this acted as a little previous support and lower time frame. So we did a break to the downside. Now we're testing. If we're able to, break it and recover, that means that we'll go back to 1944, 1940 to 1944. What's it called? Resistance zone. Then maybe take a trade from here to distance resistance zone. I get me from 1932 to 1942, 100 pips. But if we fail right now, just know that I have a sell trade. I get me. I'm willing to take a little loss to 50 pips loss. But I know that if this trade continues like this, the way it is right now, we're coming back to $1,910, $1,900 area. Are you getting it? Then find probably that bounce back to 1920 area again before going to 1880, 1880. Are you getting it? So this is how the next wave we have right now is just what I explained to you. Are you getting it just now? So pay attention, these values. that I just now. If we recover it, we might be coming back to retest this $1944 area, $1940 area. But if we, as it stand right now, we are still breaking down. We broke to the downside. So entering from 1932, from our entry yesterday, we took a what's it called a 1924 what's it called take profit, which is about 80 pips yesterday. I get me. So I don't want to wake up and see surprises, which is done right now. That's why I don't trade this young session. So I'm entering on that sell trade again from 1932 sniper entry again. So if we fail to recover to the upside, I get in a retest to go back and see if we can retest this $1344 area. I getting it? Just know that we are coming back to 1,900. Are you getting it? 300 pips to the downside, then recover back to this 1920 to 1920 30 area again before falling to 1880. Are you getting it? So that is the values we have right now. If you don't understand what I just explained, chat me personally so that I can give you the waves of the next wave gold is about to do again. I get on the board. If you know how to trade it, even though you don't know how to trade, you should understand what I mean by what I just explained just now, because this is how the market moves. It does not have any other movement. If you know about market structure, you should know that. If you know how to read the structure of any market, you should know that this is how the market actually moves. I get it. So the values are always accurate. It's you that probably don't know about market structures and know about how the your particular asset you are trading moves. Me, I understand how gold moves. Are you getting it? I understand how gold usually do fake outs, recover and continue. But if the fake out does not work, just know that we are going deeper to the downside. So the head and shoulders pattern break and retest we did previously, like I told you, the head and shoulders pattern we did previously has an extension to the downside of 1,910. So that's why I put this one here. So is it going to continue? I'm 100% sure we're supposed to continue. Like I said, I'm 100% sorry. Nothing is 100% sure in trading. We only have probabilities. So once you have like 60% confluence, you should take those trades. So if you have not taken this if you are not taking this break of the head and shoulders pattern retest, you should know that you should be waiting for breaks and retest like this happening right now. Are you getting the board? Overall, does not mean that your stop loss should be tight. At least $1940 stop loss is what you're supposed to use because of maybe fundamental news. So be very, very know what you're doing. I get it. Some people use tighter stop loss of maybe 1930. From here now, they will enter 1932 and use a 20 pip stop loss. It can work for you, but I do usually use a probably 100 pip stop loss. But whenever I'm seeing the price action recovering, are you getting it? If it recovers perfectly well and I'm seeing they change your character back to the upside and a retest and want to break a structure, as in seeing the price action going back up, I can take my stop. I can stop myself out first to see whatever is happening and probably even take a entry from this area and take another 100 pips to the upside. Are you getting it? But as it stands right now, watch out for this area. Anything that makes us not recover it, trust me, 1,910, 1,900 here will come before we recover a little bit and go to 1,880. Are you getting it? So that's what I have here for you right now. Any question? Contact me. Take care and bye for now. Bye bye.